When the world trembles and the familiar anchors of stability begin to drag, we are forced to confront a fundamental question: what truly holds its ground? In moments of geopolitical tension, when the shadow of conflict lengthens across the globe, the market reveals its deepest conviction. This is not merely about numbers on a screen. It is a profound reflection of human action, a collective reevaluation of value and certainty, where Bitcoin emerges not as a speculative asset, but as a testament to a different kind of resilience. We observe the unfolding of events, not as a sequence of isolated incidents, but as a continuous chain of human choices, each driven by purpose, each seeking to navigate an uncertain future. The recent escalation in the Middle East, a region perpetually poised on the precipice of change, served as a potent catalyst. The military strikes, the retaliatory actions, the very real threat to the Strait of Hormuz, these are not just headlines. They are signals reverberating through the intricate web of global commerce, forcing every participant to reassess their position, to shorten their time horizons, to seek refuge from the encroaching unknown. What does it mean, then, for markets to enter a risk-off session? It is not a simple withdrawal of capital. It is a primal instinct, a collective flight from the perceived fragility of centralized systems. When the geopolitical landscape shifts, the illusion of control, so carefully cultivated by states and institutions, begins to fracture. We see investors driven by the universal human desire to preserve their wealth turn towards what they believe to be safe havens. Gold, the ancient symbol of enduring value, surged. Oil, the lifeblood of industrial civilization, spiked, reflecting the immediate, tangible threat to its supply line. These are predictable responses, rooted in centuries of human experience with physical scarcity and geopolitical leverage. Yet, amidst this predictable scramble, something else occurred. Bitcoin, the digital scarcity, the decentralized ledger, did not merely hold its own. It demonstrated a distinct resilience. While traditional equities, those reflections of productive enterprise tethered to national economies and credit cycles, faltered, Bitcoin rebounded. It moved from its weekend lows, absorbing the shock of significant liquidations, a purging of over-leveraged positions, a market cleansing itself of those who mistook borrowed certainty for genuine conviction. This was not a random fluctuation, it was a revelation. Consider the nature of these liquidations. Approximately $300 in long positions were unwound. This sounds substantial, yet the market absorbed it with a surprising swiftness. What does this tell us? It suggests a market that was already anticipating volatility, a collective consciousness that had, perhaps subconsciously, priced in a degree of geopolitical instability. Fear, in this instance, did not create panic from nothing. It merely exposed the pre-existing vulnerabilities, revealing who was truly prepared for the storm and who was merely riding the calm. The traditional havens, gold and silver, reached new highs. Oil, a commodity whose price is intrinsically linked to the very conflicts that drive fear, also soared. These assets respond to the immediate, tangible pressures of a world still largely defined by physical borders and centralized control. But Bitcoin, in its quiet ascent, offered a different narrative. It is not tied to a specific nation-state, nor is its supply subject to the whims of any single authority. Its value is derived from its absolute scarcity, its verifiable ledger, and its resistance to censorship and confiscation. Is it possible that what we perceive as a flight from risk is, in fact, a flight to a different kind of certainty? The certainty of mathematical rules, immutable and transparent, rather than the shifting sands of political decree. The certainty of a monetary system that cannot be inflated away by the exigencies of war or the expansion of credit. This is the essence of sound money, not as a nostalgic ideal, but as a practical necessity in an increasingly unpredictable world. The market's resilience, particularly Bitcoin's, in the face of such events, forces us to re-examine our understanding of value. We are taught that value is derived from utility, from scarcity, from demand. But in times of crisis, another dimension emerges, the value of independence. The value of an asset that exists outside the direct control of any single government or financial institution. This is where Bitcoin's praxeological foundation truly shines. It is a tool for individual sovereignty, a means for economic calculation uncorrupted by monetary illusion. We see the S&P 500 and NASDAQ 100 futures decline. These indices represent the collective productive capacity of the largest economies, yet they are inherently vulnerable to systemic shocks, to the disruption of supply chains, to the erosion of consumer confidence, and to the inevitable expansion of credit that often accompanies state responses to crisis. Their value is intertwined with the stability of the very systems that geopolitical events threaten. Bitcoin, by contrast, offers a sanctuary from these systemic vulnerabilities. It is a testament to the power of spontaneous coordination, a market order that emerges without central command. The past week's volatility, testing both $70,000 to the upside and $62,500 to the downside, was not chaos. It was the market's relentless process of price discovery, a continuous negotiation between fear and conviction, between short-term panic and long-term vision. Every swing, every dip, every rebound is a data point in this ongoing dialogue, a reflection of millions of individual human actions, each seeking to optimize their position in a world of scarcity and uncertainty. What does it mean when a digital, decentralized asset outperforms traditional equities during a risk-off event? It means that the very definition of risk is evolving. It means that the traditional havens, while still relevant, are being reevaluated against a new standard of resilience. It means that the market, in its collective wisdom, is beginning to recognize the profound implications of a monetary system that is truly independent, truly scarce, and truly resistant to the arbitrary interventions that plague the legacy financial world. This is not about predicting the future. It is about understanding the present. It is about recognizing the patterns of human action that repeat throughout history and observing how new technologies, like Bitcoin, offer new solutions to old problems. The pursuit of meaning through exchange, the ceaseless drive to secure one's future against an uncertain tomorrow, these are the forces that shape markets. And in moments of profound uncertainty, the market speaks its clearest truths. Perhaps the true measure of a store of value isn't its stability in calm waters, but its unwavering resolve when the storm breaks. If these reflections resonate with the quiet logic you've always sensed within the market's noise, perhaps there are others who might find clarity in this perspective. We are block sonic. We don't predict the market, we read its memory.